Welcome to Dukascoin TV's On Finance. Now, we do got some financial news updates for you on the way, and of course, our job is to keep you updated on what's going on around the world on personal finance, crypto, stocks, and much more. So stay tuned. We have seen many countries like China and Russia decrease their exposure to the dollar in recent times. Also, central banks worldwide are doubting their trust in the dollar. Could this really mean the end of the petrodollar? After the Second World War, the US dollar became the standard currency for trading oil globally. Oil, a major commodity that powers the economy of many nations, was pegged against the dollar. That is, for the countries to buy oil from another one, they have to get the US dollar first. This has put the United States dollar ahead of many world currencies and strengthened the economy in the US. As of today, 60% of the $12.8 trillion in global currency reserves is presently stored in dollars, providing the United States a significant advantage over other nations. And the honor comes with a nice bonus. Interest rates are a lot lower because the US government debt is secured by national currency. Sounds appealing, right? The United States may borrow money from foreign nations in its currency, which means if the dollar was to fall in value, so will the debt. Now, also businesses in the United States can conduct overseas transactions in dollars without having any transaction costs. However, the US can cut off the dollar access to central banks throughout the world in difficult situations, thus isolating and depleting their economies. Sadly, recent developments show that the dollar might be dethroned soon. Over the years, we have seen Russia trying as much as possible to reduce its dependency on the US dollars. This push became more intense after the US imposed sanctions in response to Russia's annexation of Crimea in 2014. Now, earlier this year, the recent invasion of Ukraine attracted a new set of sanctions on Russia's placed by the White House. We saw the Russian ruble crumble and Russia's economy stumbled as foreign investors began to pull out their investments in Russia and close down their businesses. To protect the Russia's economy and its currency, Russian President Vladimir Putin demanded that the country should pay now for the oil they will be getting in Russia and its country's native currency. Gita Gopinath, the IMF's first deputy managing director, warned that the unprecedented financial sanctions imposed on Russia after its invasion of Ukraine threatened to gradually dilute the dominance of the US dollar and result in a more fragmented international monetary system in an interview with Fortune Times. Also, the share of reserves held in US dollars by central banks has dropped by 12 percentage points since the turn of the century, from 71% in 1999 to 59% in 2021, according to a recent IMF report on dollar dominance in global markets. Now, although the US currency has an outsized role in the global markets, its dominance has been decreasing slowly for the past 2 decades. Following the current wave of sanctions imposed in response to Russia's military attack on Ukraine, authorities in Moscow have indicated an interest in adopting cryptocurrencies. They are even willing to take Bitcoin alongside the Russian currency for energy exports. Legislators strive to develop comprehensive laws as efforts to regulate the crypto sector gather traction. Now, recently we have seen top banks and financial institutions throw their weight behind cryptocurrencies, especially Bitcoin. Goldman Sachs, the second largest investment bank globally, appears to be all in on Bitcoin and Ethereum. The bank plans to provide its high net worth customers access to digital currency through a third-party issue from Galaxy Digital. Now, here's the big question. Will Goldman Sachs' support for cryptocurrency inspire other large financial institutions to give their high net worth clientele a similar avenue into the crypto world? The demand for cryptocurrencies by the bank's clients has been the main reason for them to look for ways to offer new financial products focused on the crypto market. Now, the big boys are also looking to share the crypto cake due to rising inflation rate across the globe and dollar printers going brrrr. Some investment experts now believe Bitcoin is a good hedge against inflations. Goldman Sachs Private Wealth Management Division, Mary Catherine Rich, said there is a contingent of customers looking for cryptocurrencies as a hedge against inflation. And the macroeconomic context of the last year has undoubtedly influenced this. There is also a large contingent of customers who feel that we are sitting at the dawn of a new internet in some way, and we are looking for other ways to participate in this space. As more institutions for Wall Street show their support for cryptocurrency and more laws are implemented to regulate digital assets, it is expected to see more investments go into cryptocurrency. Do you want to keep yourself up to date with the latest finance news and support your decision before investing? Look, make sure you check us out on all of our social medias and make sure you tune in on the next episode. I'll see you soon.